This is Justin Pulitzer. This is my weekend review video for December 4th, 2016. Wow, the year went by pretty quickly. We're into the last month of the year. Good amount of stuff to discuss. So, first things first, let's cover some macro stuff quickly. Then we'll get into the market keys, then the major market indices, and then a couple of the stocks that everyone is curious about. I have a bunch of new ones to add to the mix because they were discussed in Periscope and on the stream prominently this week, so I think people have a bit of an interest in them. So let's get to it, shall we? So we had an unemployment number on Friday. The number, in my view, was very kind of same old. Everyone is excited about these jobs and whatever, but it's still part-timing. You still have negative year-over-year wage growth. Things are just not getting that much better in that department. And for anyone else to say otherwise, they always cite the headline number, but if you look at the real unemployment rate, when you factor in the underemployed and stuff, it's closer to 10%. And then in my view, when you factor in people who've been unemployed for so long and who no longer count, you're probably, my back of the envelope estimate is you're into probably the low teens, maybe even mid-teens. So that's really the state of the situation here. I don't want to get too much more into that. I think everyone who follows me really knows my view on that. That being said, it seems fairly imminent that we're going to have a Fed hike in December. The key to my view with the Fed there is going to not so much be the hike, but it's going to be their guidance, their dot plot, so to speak. And as of now, they're not really projecting any more hikes into the new year. If I think they come in and they're kind of cautious and they don't hit more than 2, I think the market will, I don't want to say give it a pass, but give it a pass. So let's cut in. We had this Italian referendum biz. I just started recording now, so we have the benefit of having that in. The market was down a quick 10 or so. That bing that just happened means it was over the gap down high, so already the market seems like it may be trying to bounce a bit. I think that there was a lot of complacency in that number. I did a poll this week, and we had 154 respondents, and 58% said no impact, 34% seemed to think it would hurt, and 8% seemed to think it would help. So this is a little more Brexit than Trump. Actually, I shouldn't say that. There were rallies ahead of time. So I think that there's a little bit of complacency here. So maybe we do get a little bit more of a pullback in the tape this week. We'll see. I've thought that it's possible that we pull back into the Fed, and then after that, kind of the last 2 weeks of the year, we would have a bit more of a rally. Some consolidation and back and fill here I think is healthy, considering the move up in the market, kind of that coming up from the bottom type of a situation. Anyhow, let's just get through it, and we'll discuss as we go along. I have a bunch of points to make. With regard here to the VIX, let me zoom in here. We are still in purely directional mode, meaning outright buying calls or call spreads or put spreads. I'm not really that interested in selling premium. You had a bit of I wouldn't say it was a look below because we didn't go below range, but we got to the bottom of range. We're kind of bubbling up here to the top of the consolidation. You can see the VIX here has not been able to get above the 50 and the 200 MA. Until you start getting closes above the 200, I don't really think that we're going to have too much going on with regard to the volatility. If we do get above there, we may get a move into the 17s, and it is also even conceivable we get into the 20s for a wedge trend test. I don't really think we're going to go too much past that. The good news with the referendum going kind of the bad way, quote unquote, I think it's a good thing. The Italian currency, maybe they'll have their own currency at some, again here, their tourism has been savaged because of a high euro. I'll tell you, I was in Europe a couple of summers ago for a friend of mine's wedding, and this was when the euro was kind of at the peak. And you could just feel the kind of recession there in Rome and abroad. I mean, it was just, you could just feel the lack of prosperity. So maybe this gets a a kick in the pants there and they get going. I mean, I for a while have said I don't think the Eurozone is sustainable on a long-term basis, and I think you'll get a Frexit, the French exit with Marie Le Pen and so on and so forth, and maybe we'll finally get back to a global growth, and we'll get done with all these climate accords and job-killing policies. I injected a little bit of politics there, but when you're dealing with a sub 2% growth in this country and around the world, you look at the countries that are prospering, and that's India and China, and these are the ones who are focusing really on their economies, not on existential, or I should say really tangential type policies, identity policies. Anyway, that being said, we're kind of dealing with the 200 here. If we can get above it and close above it, then I think we see the 17s. If we start getting above there, then maybe the 20 area. I'm not really all that concerned, but we are in the lower end of the range, and it seems to me like there is a bounce maybe coming. The dollar, I believe, is probably up. I haven't had a chance to check it out, but it's above trend. It's kind of consolidating here. On a longer-term basis, let me show the DX. Here we go. Let me go out to a 20-year weekly. Is that long enough? Yeah. You can see we're getting just to the 61.8, so I think that's why we kind of backed off here. But if you do a measured move, meaning like this kind of move, if you project it up, we could be looking... I'm sorry. If you 2 times the range, the consolidation range, you would get back your up to close to 109. The good news, like I said about the Italian situation, is that probably means more easing over in the Eurozone, and the Fed will probably be more cautious with their rates of increase, meaning they won't hike as much as fast. It's my story with the dollar. With regard to the UUP, you have a few-day consolidation. If you start getting up above these highs, I think at the very least this gets retested here in the 26s and maybe a little bit beyond. If this were to pull back, the backside of the old trend line in the breakout area in the 25.68-ish range is probably a buy. The gap fill is 25.59, so somewhere between 25.59 and 25.68 on dips can probably be bought if we're going into the Fed situation. TLT. All right, so if you remember, a couple of weeks ago I took out these ovals, but I had drawn a red... I don't need to redraw them in. I was going to redraw them in, but I'm just going to delete them again. This was the red oval. We knifed through that. This was the yellow oval where I said there would be some consolidation, and there has around the 200. And this is a big 61.8 of the entire range here, where we did bounce off of. There is a potential move. I'll tell you, a lot of traders I know are watching this 114.88, and the ideal situation would honestly be if we came down ahead of that into the Fed. That being said, so many people are watching it, we may actually wind up getting the bounce first back up into these 125s and kind of squeeze out the late players just because it's moved so far so fast. And on a daily basis, I want to show you a chart pattern which could be interesting here. This, to me, is a island reversal day. You had the gap down, and then the next day was a gap up without revisiting into the range. So as long as you really stay above this low of day, the 119.14, I'm fine with a row long, maybe even up to as much as 123s. I don't know if I would get more. I think we could maybe even retest this kind of old channel and old uptrend, which would be closer to the 120. I mean, basically the gap fill. I don't know where it'll be by the time we get there, but maybe at least into the gap. So I'm watching this day's range. Below 119.14, it's sort of a no touch. Above 120.21, though, I think that they could easily quickly see 123s and then 125, 126 at the very least. And I don't know why that just got triggered. But that's my view on TLT. The ideal scenario, and if I had my druthers, this would be what would happen. This would just continue down into the Fed, but I don't know if that's going to be the case. I'm sort of suspecting we're going to get the rally first. That being said, that would be the ideal setup because any spike down in this, to me, after a protracted decline like this and a break and an acceleration, that's usually more the end of the move than the beginning. HYG. So keep in mind, I was a little bearish on this once you got the break here. Let me zoom in. I had said that we would get this sort of fill here. And this is really where I covered, down into this area. It was turned out to be quite prescient. We gapped up, we got a downtrend, and then we came down yet again still further, and we got that gap fill, which I had talked about, reshorting on a rally and then covering down here. Turned out to be again prescient, and I said this here key day was the key. You had a few days of consolidation, a break, a trend, and then up, and now kind of forming what to me looks like a bit of an inverse head and shoulders. I'll have to see how this is going to play out. It's very possible that there's some kind of a gap fill, but I'm watching this kind of neckline area up here. The breakdown here was from the 50-day MA. You have a 50 and 100-day MA confluence, so this is kind of the lower end of the range if you take out this sort of extreme. So I'm thinking we could maybe bounce up to that area. Any break, though, and close above the 50 and 100, I think we'll get a squeeze going. This is very heavily shorted in options, which is actually what attracted me to it, because I didn't think the move down was done. But now I don't know if it is or it isn't. But I will say this, that the 200 here has been a lot of support. Here we were uncomfortable being below it. So I will assume the 200 MA will remain support until it is not. We'll just leave it at that. Currently have no position in HYG. I was completely out of it here down near this gap fill. I actually closed a little bit early. I can't say that I got the low of the day price, but it was within the meat of the move. It was, believe it or not, the fill was probably close to the best price of the day. You have to be very careful with options, particularly. I mean, it's not like an Apple or a Google where you're getting, where there's complete liquidity. Often you have to kind of front run something like this, because if you were trying to play picture perfect and you weren't filled, you were pretty screwed the next day. So keep that in mind. Often when you trade, I see a lot of people make mistakes like that, particularly with illiquid options. They don't, they're trying to go for, that's really the difference between real trading and paper trading. In real life, you're probably not going to get the absolute best price of the day, but try to get it as, listen, I'm not saying I don't. I've had many instances where I do get the high or the low tick, but it's usually rare, but I'm usually kind of close. So we'll keep it like that. Yeah. Let's move on. Oil. So this is a very interesting pattern. I'm curious to see how this is going to resolve now, given the kind of false, you have a double bottom here. You had this potential head and shoulders, and it seems to be failing. I talked about getting over the 49.20 would be a chip shot up to 52s, and we got to 51.80, so we got pretty close. We have a consolidation bar, and now we're opened within inside that range. I'll keep it simple. The consolidation high is 51.73. Anything above that, I think, is a long. Anything below the 50.18 probably would get more of a pullback to retest the 49s and maybe a 10-day MA test, wherever that is at the time. So just be a little careful with that. But that's the setup I'm watching. You're going to notice a lot of that type of consolidation day, right or right out, above or below, just to warn you throughout this video. This technically this is technically a secure high. I don't know if that's going to play out or not. We have a Friday narrow consolidation range. Anything above the high of day of Friday to me would probably be a long and negate that pattern. Anything below the low, I think you can play for a move to the 10-day. If the 10-day doesn't hold, then the 20-day. But yeah, it would be a quick right or right out trade above the high of day, and a quick right or right out short below the low of day. Oh boy. The 200 MA in oil, by the way, is very key for all these. Some of the stocks that I've been watching, ones I haven't talked about, that kind of the new stuff here to talk about. EOG. Let me get this into a 3-year daily. Let me show you something on a longer term time frame, 15-year weekly. This is a channel, a pretty defined one. We spent some time above it, and now the bounce here was to it, this bounce here was to it. So we're kind of near the channel high. Let me go back into more modern times. People often ask me why I use the 9-month daily. I just kind of like it. Let's use the 1-year daily for this one, though, for now. So we have this has moved up. This is a come up from... This is a come up from the bottom situation. This was a look below here of the 61.8 and fail. We're up here. You have a bit of a topping tail consolidation day, but with a close kind of below the low. You could use this day's range above 105.47. I think you would probably come back up below the low, the 103.39. I think we'd probably come back down and maybe retest like 98s. Might even want to draw a Fibonacci into this, put a Fibonacci on it, right? A 50% fib would be 98, a 61.8 would be down to 96. Let me adjust this. This was 90. Like to be spot on. I don't use 38.2s on pullbacks. So yeah, somewhere between 96s and 98s. If this were to pull back, I think is a good right or right out buy area. Apache. No, I'm sorry. Anadarko. This one is following a fairly interesting trend. You had a false breakdown here. And I know a few people had mentioned to me about shorting this here. I said, be careful. You didn't break the 100 MA. That had been a lot of support here. And then they got their snot boxes rocked here. This came up right now to the 50% fib. So logical spot for some selling, a little bit of pullback here. I think, again, 2-day lows below there, I think you can play for a short for a retest of the breakout. Above the highs, this could rally all the way up to channel high, and you also have a 61.8 up at 80.90. So maybe this kind of just drifts to there. But I like the 2-day range, particularly below the low for a quick right or right out short. And anything above the Friday high, I think will probably drift back higher. Rather squat range too, so it's a really easy right or right out play. Core Labs, not one I talk about very often, although I do watch this stock. This is an interesting pattern. You had a bit of a look below range here. Consolidation, and then a gap up to the trend, which closed above, and then above. Then we had a big breakout, and then an inside kind of doji harami. I'll keep it simple. Above the 2-day high, I think long, probably for a move back up to 120. Below the consolidation low of day, maybe we get a retest of the 100 MA, since this was kind of this was tough, right? I mean, look, it was support here, kind of broke here, and then it was resistance. So I would think pullbacks to the 100 MA are buyable for a right or right out basis. Below there to me is a GTFO or a right or right out short. You know how we'd be rolling. One more thing with oil, and this is what I'm watching. You have a couple of setups here. Let me do a 2-year daily. You have a big picture inverse head and shoulders here with a potential neckline setup here, a breakout. So I would say this head and shoulders failed. So I'm watching this. If this were to kind of rock it up on the OPEC cuts, I don't know how that's going to play out, but I would think we'd at least see the gap fill here to the 56s and maybe even a move back up to 62s. So do keep that in mind. Just tuning in here to the futures, and we are making some new lows there. A little, like I said, a little bit of complacency in there, but maybe that's going to set up for a play, which we'll get to with SPY in a minute. Alrighty. China, shall we dance? Let's go to China. All right, so we're back up above We had a bit of a breakdown back into the channel, and now you have a 10-day and a 20-day. This kind of pointage, the 10 and the 20 needs to hold. If we lose that, I think we're going to come back down and retest these lows near the 200 and maybe slip back into the channel. So anything above those areas, I'm okay with playing long. Back below, probably not so much. The BABA. We had a trend hold, a very kind of weak, a bit of a weaker bounce. We didn't even fully, did we get the 38.2? The high here was not even quite to the 38.2, but the 100 MA resisted, and we're back down. If this were to lose the channel in this low, I think we'd at the very least see 84s in a very weird, I shouldn't say weird, but in a bad scenario, I think the 61.8 would be in play down to 78s. Like you had the leg down, the bounce, and then a resumption. This area to me would be very interesting to sell some out of the money puts, because look at all where this consolidation took place. It's all around that 61.8. So I would probably be looking to sell the like 73 puts, considering that's sort of where this triangle started for the move up. So somewhere around the 78s, I'd be looking to sell the 73s or maybe even the 70s, depending on the juice. That being said, the 200 MA is a very key level. You can see here it was a big point of contention. So I would be a little cautious being short as long as we're kind of above the 200. It's also, look, right where this big breakout was, where 86 is. So until 86s really break, I'm not going to get overly bearish on that. This also is a big point of contention. Consolidation, you can see here, that's really where the breakout took place from. So it, to me, at this point, is really just a check back to the breakout. If the market holds up, that area should hold firm. If it softens, it will not hold up. IBB, this thing is just a disaster. Just consolidating in a range. It looks to me like it wants to fill this gap here, and as long as it plays in the range, traders do what works until it doesn't, so buy the low end of range and sell the high end of range. Keep doing that until it doesn't work. Gilead, I'm waiting for this effort to flush. You have this gap up above trend, and now it's just kind of riding it down. I had drawn in a 1.618 Fibonacci retracement. We never quite got it down to the 69s. If you look on a bigger picture, this was a 50% fib. Since we were so close to it, I don't think it really would be as significant anymore. This one, though, the 61.8, if there were to be some type of news that took this down to the 57, 78, I'd be looking to sell some out of the money puts. I did some bigger picture work on this thing. Let me see, 5-year weekly, maybe. This will clean up the pattern a bit. Yeah. So if you measure the decline here, from the top to the kind of the spike low is 37.37. If you go from the top down to this low is 41.48. If you were to project that down, you would be looking somewhere into the 40s. I have to do the actual math and put it on. I don't know that we get to the gap fill of 32s, but it wouldn't surprise me. My guess is I'd have to do the calculation, but it's probably close to these 46s. Look where this pattern really kind of takes off from. My guess is, where it kind of just rises and then it starts getting way steep. I think this area to me, somewhere between the 57s and the 46s, I think that $10 or so is going to be a good low in this bad boy. The thing that really is ugly, the real ugliness about this, is you have a really long, elongated head and shoulders situation, and you're now firmly below that neckline. So until you were really able to get yourself back up above where this breakdown here, the kind of the bounce high took place, it to me is a no touch. I mean, anything to me, if there were to be a rally to the trend, it's still a short until it's not, really, frankly. I just think that this thing would behoove itself to kind of flush. More macro-y, the JJC, which is the copper ETF, still in bull breakout mode. This thing could even pull back all the way down to 26s and still be fine. 50 MA here was kind of key. That we held. I'd love to see a retest at some point, probably higher. But yeah, I mean, copper rallying to me tells me there's not really that much of a recession that there's really no recession to worry about. You have a big body here. I would use this kind of range. You can see this was the breakout bar and then the consolidation. So anything above 28.15, I would say is bullish. I wouldn't even use that much though. That to me would be a little too far. I think you could even use this Friday's bar. Below the low is probably a right or right out short down to the 28s. Above probably gets you up to 33s to the 200 MA in the JJC. IYT, which is the transports. Again, not something that would be doing this if we were in bear market mode. And I'm getting a little bit better with the charts with this new setup. This was a trend line break, a rather dramatic one. You have a consolidation doji here. This was a inverse head and shoulders, a big one and then a little one within the pattern. You had the breakout. I mean, you could even pull back, and I do think we will pull back at some point to retest this breakout, but I don't know that we won't see the old highs and the channel highs first. I think you could use this Friday bar low below 160.71. You probably could do a right or right out short for some type of a pullback, maybe even to 53s. Above the high, though, above this 163.57, I think you're looking at 167s and maybe even 169s. You could see this was a very defined channel for a while. It broke out, looked in, wasn't comfortable. So I think that channel is still fairly valid. And you can see we've hit extremes above it and extremes below, but moves above or below haven't been comfortable. FedEx, major bull stock at this point. I mean, all-time highs. But keep in mind, came up from the bottom. So I don't know that I would be first chasing this move here. By the way, a lot of people have been asking me lately how to draw Fibonacci's. This is sort of how to cheat the system in toss. And we didn't snap well. This was 185.19. So what you do is you kind of do it in reverse. So how to do it? You take out the regular fibs and you click the extensions. For some reason, they don't have a 1.272. So this is how you add it in, and I usually like to make that pink, and I like to make this one red, meaning that's where I'm looking to sell. So this is sort of sell light or trim and trail, and then this is finish up your position. And if you do that, you're talking about 225s. 203, though, is the 1.272, and given that we came up from the bottom, I like the trim and trail up there, and then, it's weird that this didn't show the color, and I didn't change it on that one. I changed it on the wrong one. All right. So, yeah, this area here to me is the end target. I'd be looking to sell there. I like pullbacks as a buy on trend. So the trend is your friend until it's not. So pullbacks to the trend, I think, are a buy. Again, came up from the bottom, a little dubious about buying now. Buying the breakout, I had been playing FedEx long, but I'm now in more profit-taking mode. I'm actually out of the position at this point. I had been short puts, they expired, but I am looking to kind of reload on a trend touch. So again, these all negate the bear market kind of thesis. Caterpillar. So Caterpillar, funny thing happened on the way to the weekend review video. All right, so Cat had this, and I don't want to be in the weeklies for this one. Although you can see, look, this week is a seller shut-off pattern and is just consolidating. So Cat, to me, there's really no negation of the pattern until you lose this 91.90, and then even then, I mean, where are you going to pull back to? Maybe just into the middle of the range, like 87s. Let's go on a daily chart, though, because something interesting happened. You had a Cat conference, I think it was with Goldman Sachs, and this was the day here. You can see it's a big body doji, and they lowered their kind of guidance. The stock didn't react too poorly. It kind of came down, tested below the 10-day, and then came back up, but there was a little weakness on Friday. I'll keep it real simple. If you can get above the high of day that day, I think we come up here to the 105s, which would be just grind up to the 105s. Anything below that low, which is 94, I think we come back down and test the 89s, which is sort of the gap low of day and this breakout area. So I like long over 97.39 and short below 94.05. That's a very highly actionable setup for Caterpillar. Bank of America has just gone full-on ballistic. I don't like chasing it here. The 1.618 is up at 23. The risk reward here to me is not what it once was. So I'll say this though. You have a bit of a trend here. You had a bit of a look below. The 10-day has been holding. So if you're long already, the 10-day below there I would use, and this kind of wedge is your stop. A little bit of excess here, a bit of pullback, but nothing crazy. I do think at some point it will see this, but I don't like the idea of chasing. I'd be more of an interested buyer if this thing were to have an actual real pullback. To what? To maybe a fib? Maybe on when look at the 50% fib is really a retest of the breakout. So down here at 17s. I don't know that we will or we won't see that, but I would be a buyer there for Bank America. Anyway, let's get into the major market indices. Enough with the macro for now. I have a lot of levels drawn in here because SPY is my baby, right? I talk about SPY. I'm sort of the SPY guy. So we had this couple of days down. I just want to caution a couple of things. I know a lot of people are getting themselves very bearish on the market because of, a couple of down days. The breadth, the market internals, you had I think one negative 1,000 tick in this whole move. And the breadth on some of these days were just either slightly negative or positive. That being said, you have we're set to have a point gap down, right? So that would be down to the 118s. So I'm looking at this area. This was the consolidation around the 117s. I have a hard time getting too worried about anything until this breaks. And even then, this area to me, the 50 MA, this strike, the 215s are a big strike. I think that this 50% fib, maybe if we get really extended, we could get down to the 61.8, but it just seems to me that the selling is more the consolidation type. You could see even Friday close still above this this kind of breakout area. So I'm more into not so much the short, short for the pullback. Although I do think that is maybe a bit of a viable play below the 10-day. I had mentioned that we closed below and that we had a failed retest, and I thought the move would probably be a little bit lower. But now with the gap down, I don't know how much lower. And I'm going to say I always assume in my videos it's a new trade sort of unless I specify. So down on the backside of the old downtrend line between the 117s and the 115s, I'm starting to now think about to buy for a right or right out long. This just came up from the bottom. The breakout was a little suspect just because it moved up so much, and now it just needs a little consolidation and pullback. The expected move in SPY this week is $3.23 roughly, so that if we went up, that would take you up to the 222.91. If we come down, it's really 316.45. And then if you tack in a little bit more volatility, that would basically be your 315. So that's basically what I'm thinking. By the way, when you have consolidation ranges, you usually don't tend to traverse all the way to the bottom of it. You'll either stop at the top of it or get to the middle of it. So look where the middle of that roughly is. It's basically in here. If you factor this in, it's really here. But I'm thinking that this area to me, the 50 MA, was the key. Look at all this resistance, and now you punch through it, it should be support on the pullback. So somewhere between the 17s and the 15s, in my view, is sort of your max decline if the market is going to stay healthy. IWM. So it's funny, I had been bearish, then bullish, and now I'm just sort of cautious to neutral. I would have to show you on a longer, let me show you on a longer term trend line what I had been seeing and what I was doing. This one, it broke the trend line here. Look, remember I said we basically got up to the upper part of this box and I thought we'd get down to the lower part of it. Look where we came down to, the lower part of it. Let me draw a more modernized print. So we came down to the lower part of it and then just got crazy. 15-day, remember I've said when you flip a coin 100 times, sometimes you get clusters of 15. That's usually about it, and now we're pulling back. We're below the 100, below the 10. Anything in my view below the 10 puts the 20 in play, but by the time I don't know if we'll get there Monday or whatever, but the old reference high was 129.10. This kind of consolidation here was there. The gap fill here is like kind of just below there. So this area to me makes sense. If we were to lose that, I would say that we probably see a trend touch, but look where that coincides with, the breakout of this. So I would love to do put ratios, buying here and then selling 2 times as many down here. And I like the idea of buying the dip. After this type of a move in IWM, you better believe that these areas will be buys, at least for right or right out trades. So I'm thinking we could either bottom here around the 129s, the 128s, basically 129, or we'll bottom down near the 125.88, 126. Honestly, this would be the more healthy consolidation. I would love to see it kind of come down and get itself really work off all of this and then just kind of set up. If we were to throw a Fibonacci on it, from the low to the high, did we snap properly? Yep. No. Hold on, 114.88. Interesting, 114.88. That's the TLT level we're looking at. I got a lot of requests this week, by the way, from people asking me how to draw Fibonacci's and stuff, so that's why I'm doing it a little bit more live. I saved a few to do that with. The 50% is a little bit below the trend, and it's like right into this consolidation. So yeah, somewhere between this area, I would think 125s. That's also a 50 MA. I think that area would be a good right or right out buy area, and I like it as a endpoint for a spread. I like to do buy puts up here and then sell 2 times as many down there, maybe for a credit trade or for zero. If you could get it on for for zero, it's okay too. The Qs holding on kind of for dear life here. A lot of weakness in the big momentum stocks. I drew this in. I think that this could be in play, the 113s. It would basically be a retest of the range low. We're just kind of consolidating in a range. So we got from the high. I'm just really looking for a move to the low. If this were to break, like if we were going to get a flush, the 200 MA is roughly around these 111s. That's a 50% fib and an important one. I would be interested in selling, particularly if we came down straight. 108.59 was the 61.8 of the range, this entire range. I think the very first time it would at the very least hold. So if we came down to trend in this area, I'd be looking to sell some near dated either same week or next week out of the money puts at the 61.8. Apple. By the way, the move in the IWM is supposed to be $2.72 this week, and Qs there's basically $2.18. Apple. A lot of news on Apple, a lot of opinions floating around. I had talked about this area being some resistance. Let me zoom in a little more. This is getting ugly. It's a very sloppy chart. I'm sorry. I know I have a lot on here. But this was the breakdown, really, so that's where I had said I thought that the resistance would be. I don't know if this is forming an inverse head and shoulders, but you basically had a 100 MA hold and a range hold here of the 119.85. So Friday's range above 110.09. I like long for a move at the very least back to the 10-day, maybe to the 50 MA. Below the low, the 2-day lows, the 108.85, I think could be a problem because that's this low here, this pullback bar. This really can't be violated if we're going to stay bullish. So below there, I think is a short. Maybe even to retest the 105s, 107s to 105s. Amazon doing exactly what I thought it would do. And I've gotten some criticism on this because people don't watch my videos or pay attention in full, and they only look at end ranges. Remember what I said here. There was a big pullback, 148 points, a $90 rally just below the 50 MA, and then the completion of the pattern. What happened here? Big pullback, rally up just below the 50, and now coming back down. I don't know that we complete the pattern all the way down here, but I can say this. You have a gap fill and a 61.8 down there, and this area to me is a screaming buy, particularly if it happens the same way where it's just straight down. That being said, there are some very important levels between here and there. I was hoping, and I think the reason this bounce is fading, was because we didn't fully check back here to the 696.44, which is where I was looking to buy it. There was a 200 MA here, a breakout area, and we didn't quite fully get back. And you know what I say with a slingshot? A fully cocked slingshot gets a bigger rally, and a half-cocked slingshot gets a half-cocked bounce. This is what happens when you bounce ahead of key supports. Now we are pulling back. We're below the 100. We're below the 50. If this were to get back up above this swing high here, miraculously, listen, I don't think you need to buy this thing until you get a trend break. I'm either looking to buy it lower or on a trend break. If we break the trend, then I think we can mosey on back up to the channel high. But until then, I'm just kind of in wait and see mode and probably looking to do more like put ratios or put spread type of situations with Amazon. So it's either a buy on the break of the downtrend or lower. Facebook, I don't want to say fully soured on, but I have not been as bullish as I had been in the past. I said the 128s to 130s were the spot to sell. It got 133, but if you didn't, sell, some people criticized me for being early. It did get 3 more points, but guess what? It's a hell of a lot lower now. You have a double bottom here, basically. You have a consolidation doji inside that range. Above 116.48, I think can bounce a little more. Below these 2-day lows is a short, probably down to 108s. Couple of things. Below, you had this kind of one-day wonder. This faked out a lot of people. I said it was a long over the trend, but you had to use a stop with the pullback lows, and now it's below. A couple of things to keep in mind, and this is for the initiated, right? 5-year weekly. You can see, just look how much this thing is pulled up without a really, truly significant pullback. Just saying. 50-week MA. Hold. Look below and fail. Here, look below and fail. Here, look below and fail. Here, look below and accept so far. Anything below that 50-week MA, which is what is this, 115.40? No, it's higher. Can we zoom in? This thing has gotten so annoying. Let me see, 9-month weekly. Trying to zoom in, just bear with me. 116.34. Anything below there to me on a closing basis, which we now have, is very iffy to me. You had this very weak bounce, and anything below there to me is probably a right or right out short. Yeah. Why is Facebook going lower? Rising dollar, not good for Facebook. Rising interest rates, not good for momentum stocks in general. A lot of the pullback in these stocks has to deal with the fact that they were the only game in town for a long time, and now you have rotation into cyclicals, energy, banks, if you drop them on your foot, they hurt type of stocks. Anyway, this is not looking so hot. A loss of the 2-day lows, I think we go lower. If there's a move over the high, there's probably more bounce, maybe back to the 200 MA. But I'm waiting. I'm keeping my powder dry with the Facebook at this point. I have a feeling that there could be a move lower. I don't know if it has to deal with the fake news or whatever, which everyone seems so excited about. But my issue with Facebook is I just think that they lowered their growth expectations, their revenue growth expectations, and when you have a high multiple momentum stock, that is not what you want to hear. So No rush in my view with that one right just yet. And there's still a lot of complacency. Everyone on TV I hear keeps saying they want to buy Facebook. They want to buy Facebook. I want them to hate the stock. That's when it's a buy. Google got a look below trend and fail. You're kind of above it, right at the 200 MA. I think you could use Friday's range above the high of day is probably a little bit of a long. Maybe back to 780 below the low. I think you'd revisit these lows. I was, again, bummed. Look, we have a regression line that I drew in here, which coincided with the 61.8. This stopped just shy of there. That's why you get the half-cocked rally, and it, because it bounced ahead of really where it should have gone. So we'll see if we could get back there. That is my idea. We have a channel low down here, which is roughly around these lows. If we could get there, I would be an interested out of the money put seller on the channel low. I don't love playing the chop inside of Google. I either like shorting the channel highs or buying the channel low. Netflix. This one is actually looking pretty freaking good. I like their new thing with the downloading the movie to watch on an airplane and all that. This was a look below and fail, back up. This is a trend break, and you took out multiple days of consolidation. So, yeah, I'm okay with Netflix here. If you lose the low of day here, the 116.5, it's a short. If you stay above the high, I'm fine with a pullback to as much as 118.68. That's basically halfway of the candle and the high of day of this bar. So anything 118.68 plus is okay. Below there is a little more iffy, and below the low is a short. So this really probably, if the pattern holds, should revisit the highs. So Netflix pattern looking okay. One I have been neglecting, I tweet about it, but I've been neglecting this NVDA. What more is, this is sort of the definition of a bullish stock. I did say in last week's video, I think it was last week's video, or maybe it was Periscope, a break of the 10-day I thought saw the 20-day. That happened really, really fast. I said in real time to cover, and it has rallied. You have basically a 2-day low. Anything below these lows, these 85s, and also a kind of a channel. You have a channel within a channel, so that doesn't surprise me that this held. If you lose these 2-day low, I think we're coming back down to retest the 78s and this channel, this kind of backside of the channel, which will probably coincide with the 50 MA. Why is the 50 MA significant? Held here, basically here. 50 MA will be a buy the first time for a day trade at the very least. So anything above Friday's high will probably bounce to the 10-day. Anything below the 2-day low, I think we will see this 80-ish level, 77-ish level. Wherever the 50-day is, I'd be a buyer on the 50 MA. Maybe even try to... I don't know if I would do the puts. If you want, maybe same week out of the money puts. But I would definitely be a buyer of the stock for a right-out trade in NVIDIA for the first time on a 50 MA test. Gap. I've played this quite... I don't want to say masterfully, but I sort of have. I had bought it. I had sold it. I don't remember what the points were. I think it was somewhere up here. It wasn't quite the high. I think it was here, actually. Then it came back, and then it got up. Then I bought it on the gap fill here, and then it just... I love when stocks do this. They just go... They rally ahead of perfectly. I forgot where I got out of it. Somewhere in here, and then it really went berserk up high. So I'll do what works until it doesn't. We have a 50% fib here and a channel low. I'm fine with nibbling here, but I'd really like to buy the gap fill because, look, that's what worked the last time. So I will put some buy orders in or some out-of-the-money put sales. 22.25 is the 61.8, and the gap fill is 22.78. This area, even though it would be below the channel, keep in mind we went above it, I think for the first time, considering we came down so hard so fast, and this company is likely not going out of business, I would be looking to sell some out-of-the-money puts in this kind of old reference low area and gap fill area. I think that would work. Or buy the stock. Amberella. All right, so what do we got? We got a trend break, a channel break here. It didn't hold. I'm sorry. It hasn't broken these lows yet. So the 200 MA here is the right or right out play. If it can hold, I think it will rally back up. The better play, in my view, would be a buy around these 61.8 confluence if you take it from this low, or if you take it from, there's an older low. Let's do it. What is it? Let's just do 2-year for now. From this low or from this low, wherever you choose to draw it from. I want to draw attention, though, before I draw the fib, to this reference low area, the 48.5. Keep that in mind for a minute. Let me include it in this drawing for now. Look where these lows and look where these 61.8s coalesce around, kind of close to that area. So let me see if I can draw this in. This area to me, and it's, by the way, a channel. So you have a channel low, that old 48.5 low, and 61.8 confluence. It is a buy the dip area. I would be waiting with open arms down. This was also, by the way, kind of the breakout. I don't know if you'll get the full gap fill to the 42s, but what I would do around 49s, 50-ish area, is sell those gap fill puts, the 42 half-ish or whatever is down there. So that's my play with Ambarella. Under Armour is setting up, I think, even maybe as we speak. So a couple of interesting levels that I'm watching with Under Armour. So you have a 61.8 down here at 27.97 and a channel low, roughly, if it were to go right away down to the 26s. So that area is where I'm looking to buy it, somewhere in this range. Particularly, put sales are probably like sell 25s or something. That's a big round strike that people like to play. The gap fill is 22s. I don't know if we'll quite get there, but that would be really the ideal setup down to 22s. However, I am cognizant of the fact that we have a bit of a hammer on the Friday chart. This thing, I gotta call tech support one of these days and just have them like school me on this. We closed just below this reference low. If we were to be above this high on Monday, I think we would rally back up to the channel high and this high here, basically the 31.65 or whatever. Just because this would to me be a look below and fail because it was a hammer and there was no follow through. So I either want to be looking to buy a little bit lower or buy stop this over 30.32 for a look below and fail trade for a move back up to at least the channel and maybe even the high end of range. And maybe, if we're really lucky, the start of the gap. I don't know if I'd play for because look, this is the low end of the range. I would only play to the high end of the range. I don't know that we get the gap fill, but I don't know that we don't get the gap fill. So a long over 30.32 for potentially a move to 33.64. That's the Under Armour. Or buy it lower, like I had originally said. Kellogg's coming to a trend. The channel low is still low around the 50% fib, around 61s. But this has come down a lot, and there is a mini trend here, and a reference low right here around 68. So I'm okay with a right or right out trade here for a bounce. This came down from the top, 1 day bounce. It seems like below the 200 is weak, but I'm thinking that there should be at least another up leg before a resumption lower. So I'm looking to buy it kind of around here for a right or right out trade. If it breaks, just get the F out and wait for it to get down to the true support down near the 50% fib, near the 61s. This is, again, the rotation out of the yield and the defensive stocks into the more bullish growth stocks. I have a risk reversal on in this thanks to one of the fast money guys. Dan Nathan actually talked about this on TV. And I was listening in my car, and I actually liked the trade. And I put it on. It's like short 8 puts and long a 12-15 call spread. This worked pretty well. I filled kind of quickly, which always gets me nervous. But it was riding the 10-day, and it seems to come up. It seems like they're going to get bought out maybe by Sirius Satellite Radio. So, look, that's basically a move up to these old highs. And, hey, I'll cash out or something soon. I'm already up over 2 points on it. I like that trade. I'm okay if there's a pullback with anything that holds the 50 MA. That was roughly where this was holding, broke down from, so this needs to hold now. 50 MA is a row buy for that. Potash, this to me looks like it's forming a long base. You really need to see it clear the 1983 for a move back up to maybe 24s and potentially 26s There was a really big reference low back here where this real breakdown came from. I do think at some point it will see this. I just don't know when. I've been long for a little while and just holding patiently. It's not working out so quickly, but it isn't killing me either. O is down to one of the 61/8 of this range. If you go to a longer one, it's down near where the breakout was here, around $50. I, for the first time, sold some out of the money 50 puts, very small, just because I'm thinking that there could be a bounce ahead of the Fed, but would really be looking to buy this more in size down on the true trend line, somewhere between 47s and 50s, somewhere down in here. I don't mind owning it down there. It would be well over a 5% yield, and I think that that would be a winner. SKX, I talked about this in real time on the stream, that this was a pattern shift in the stock. Could we zoom in? Yeah. Can I get a what? So we had this was a gap down, and they basically just bought it. It looked like it was breaking down here with a look below and fail. And then this day I said that we, and I didn't even have that great trade location on this, but I had said once you broke the 22 quarter, any pullback to 22 quarter is still a buy. The next day was a gap up, and the next day is a hold. This to me looks like it may come up to the very least the 200 MA and the gap here at 27. At that point, we'll play wait and see, but there is insider buying on this. I thought this was just getting too low on a PE multiple basis. By the way, when you see something like this with a down move and then a bar that negates all of the consolidation, it's usually a long, and it was a gap, and this one was good. If you're new to the party, 25.58-ish, I don't know, 25.28-ish, somewhere in here needs to hold. If it loses there, then I wouldn't want to be associated with it so much. But, I mean, I wouldn't get really panicky until I won't get any panicky on this because I have great trade location from this day. I didn't have great trade location on the day, but I have great trade location now. I won't take this off unless we break 24.65, which was, the reference low was 24.56. I'll use this entire bar, I think, as my stop. But if you want to be more conservative, 25.58. Below there is probably a decent stop. But anything above the 2-day high, I think this could go a little bit higher to the 27s and maybe even look into the gap. At some point, this may fill. I can't say that it will or it won't, but it probably will. But that's the story with how I did and how I am trading the stock. Anyway, that's my story. I'm sticking to it. I think we're a little long in the tooth as far as the time on the video goes. If you're not following me on Twitter, my handle is @JustinPulitzer. Please leave some comments. Help me make the video. Help you, and make the video better. And hit the thumbs up. If you're not subscribed to my YouTube channel, hit the subscribe button, and there's also a little bell with a plus, and you'll get notifications when I post new videos. Anyway, let's have a good week. I'll probably do the Periscope on Wednesday. As of now, that's my goal, to do Wednesday. Maybe Thursday, we'll see. But as of now, it'll be Wednesday. Have a great rest of our weekend, and cheers.